That I'm joined on set by Stephen Carroll. Hello.
Hello, Jade.
We're going to start with China. New figures which have shown that the economy there continues to cool down.
Yeah, that's right. The figures from the Chinese government show that the country's economy grew by 7.7% in the last 3 months of 2013. Now, that means also that China's full-year economic growth is also 7.7%, the same rate as 2012, and that's the lowest figure the country has seen since 1999. Now, what's interesting about this as well is if you look ahead to what's happening this year, analysts are saying that the world's second largest economy will grow by just 7.4%. That sort of growth, very much something that European countries would like to see, but would be the lowest since 1990. Well, for more on this, let's go to Beijing and speak to our correspondent there, Shannon Van Sant. Shannon, hello. Can we just start and explain what's exactly behind these latest figures?
Well, there are a lot of factors behind these figures. The working age population here in China declined by more than 2 million people last year. So China is already starting to feel the demographic change of its huge aging population here, which of course takes away from the number of people that can work in the workforce in any industry, including manufacturing. China is also trying to shift from manufacturing to the services industry. It's doing that through a number of different measures, including allowing its currency to evaluate more quickly than it did in the past. This is having an impact on the economy. China is also clamping down on credit in many ways. They're trying to cool down various local economies here, including the real estate market. That's having an impact on the economy. And also declining demand from overseas. Demand from Europe and the United States still remains weaker than it was a few years ago. So there are many factors leading to this slowdown in the economy. Earlier this year, Premier Li Keqiang said that he wanted to maintain China's economic expansion at a reasonable rate, and he said the bottom limit for that reasonable rate would be 7% growth a year.
But of course, this at the same time, the Chinese economy really has a very big problem with debt.
Yes, that's right. There's a tremendous amount of debt at the local level. The National Audit Office here in China earlier this year found that there was more than 17 trillion renminbi in debt at the local government level. So China, of course, wants to mitigate this risk to the economy. It's also cracking down on shadow banking. Shadow banking is ways in which both official banks and illegal banks here in China lend people credit at better rates than they might be able to get through the state-run banks. So China is really clamping down on that because those flows of credit and that flow of cash through the economy is unregulated. It's not transparent, and that could also represent a real risk to the economy. So there are a lot of ways in which China is trying to slow down its growth, trying to prevent greater risk to its economy. So these lower numbers for the Chinese economy are not necessarily a bad thing.
Okay, Shannon Van Sant in Beijing, thank you.
All right, Stephen, well, how is that news affecting the markets then?
Well, interestingly, although the figures did beat some estimates, they weren't quite optimistic enough to help the markets. The Shanghai Composite actually hit a 5.5-month low in trading earlier today. It's still below that 2,000 mark, down about 0.42%. Just the Kospi and Seoul, the only green point in the Asian markets, up almost 0.4%.
All right, well, here in France, it seems more likely that there'll be Chinese investment in the car maker Peugeot Citroën.
Yeah, PSA, as the company is also known, says has been struggling for some time now, particularly with falling sales in Europe. The firm's in the process of cutting some 8,000 jobs here in France. It needs to raise around 3 billion euros in new capital, and the firm's supervisory board meeting in Paris on Sunday night agreed to examine further an option which will see investment from the Chinese carmaker Dongfeng. The French government has said that it wants the company to stay French, though, so it will also take a stake in the company of around 15%. Let's listen to what the Industrial Renewal Minister had to say about this on French television.
If your question is if you are following this, are you paying attention? Have you gone to China and spoken to the Chinese government? To all these questions, I respond yes. And if you're asking an ultimate question, will PSA stay French? My answer is PSA will stay French.
Right, finally, France is taking off 2 tax havens off its blacklist.
Yeah, a bit too late for perhaps the French government's Christmas card list, but both Bermuda and Jersey are off the list of tax havens or places that don't cooperate in tax matters with France. New agreements also signed with both islands allow the authorities to exchange the necessary details to allow compliance with French tax laws. This, of course, after the recent crackdown the French government's had on those holding foreign bank accounts. 11,000 French people declared they had foreign bank accounts to the French tax authorities last year. Still plenty of countries on the naughty list though, Jade, including the British Virgin Islands, Brunei, Botswana and Guatemala.
Right, we'll have to find somewhere else to stash our millions then, won't we?
Certainly.
Thanks very much for that wrap up of the business news, Stephen Carroll. All right, it's time now to look at what's